Hello everyone, we hope you're all healthy and having a wonderful day today. We are Richly. Welcome back to the channel. We're back with yet another exciting video. Cathie Wood, the CEO of ARK Invest, says Ethereum is on the rise. Before we get started, subscribe if you haven't already. Otherwise, Ethereum price will rise because Elon said this. Stick around until the end of the video to know why Cathie Wood is bullish over Ethereum. Bitcoin, which has lost up to 50% of its value in recent weeks, has come under pressure from institutional investors worried about its environmental impact, according to Cathie Wood, the founder of ARK Investment Management. It was sparked by the environmental, social, and governance movement and the perception, amplified by Elon Musk, that Bitcoin mining had some serious environmental consequences. In a pre-recorded interview broadcast Thursday, she told Nathaniel Whittemore a lot of institutional buying got on hold. Musk, who had boosted markets by announcing that Tesla will purchase Bitcoin for its treasury and accept it as payment for its cars, has now altered his position on the latter, driving Bitcoin prices down. Elon received a few calls from institutions, according to Wood. I noted that Larry Fink is the CEO of BlackRock, which is Tesla's third largest shareholder. He is particularly interested in environmental, social, and governance issues, particularly climate change. I'm sure BlackRock had some concerns, and there may be some very significant European investors who are very sensitive to this. Wood, a well-known innovator, is optimistic about the future of Bitcoin, which she describes as the world's first rules-based global monetary system. In a recent interview with Bloomberg, she predicted that the cryptocurrency will reach $500,000. She predicted that central banks would begin buying crypto assets for their balance sheets at her consensus appearance on Thursday, and that Musk will be favorable for Bitcoin in the long run, enhancing its environmental profile. He has pushed for a lot more discussion and critical thinking, and I believe he will participate in the process, she stated. Whether you like her or not, the investing community pays attention when Cathie Wood talks. Each of ARK's 6 actively traded exchange-traded funds is focused on long-term growth and paradigm-shifting technologies. Aside from electric cars, Bitcoin is one of Wood's most vocal ideas. As a result, it's no surprise that the investment management firm's numerous funds own shares in Coinbase Global, one of the world's major cryptocurrency exchanges. However, the sheer volume of shares purchased by these funds in the 2 months after the company's public listing is startling. Let's look into ARK's Coinbase stock holdings, as well as the company's strengths and shortcomings, to see whether Coinbase is a stock worth investing in right now. As of June 16th, ARK's funds owned a total of 4.63 million Coinbase shares, valued at roughly $1.04 billion at the time of writing. That's roughly 2% of Coinbase's fully diluted capitalization, which includes ordinary stock, options, and restricted stock, which totals 261.3 million shares. ARK is now one of Coinbase's largest institutional investors. The ARK Innovation ETF, ARK Next Generation Internet ETF, and ARK FinTech Innovation ETF have been steadily adding shares after a large buy during the first week of Coinbase's direct listing. The daily buys and sales of these 3 ETFs are shown in the chart below. The majority of ARK's stake was purchased in April and May. That's a positive indicator for investors considering the stock at its present price, which is far lower than ARK's. Coinbase is currently one of the ARK fund's most valuable assets. It's currently one of the top 10 holdings in ARK's flagship innovation portfolio. Coinbase is the most popular Bitcoin wallet and exchange in the United States. Last year's first quarter saw 34 million verified users, resulting in revenue of $1.28 billion and net profits of $322 million for the entire year of 2020. But that was nothing compared to the year's first quarter. Coinbase ended the quarter with 56 million verified users, $1.8 billion in sales, and $771 million in net income, resulting in a profit margin of 43% compared to 25% for the full year of 2020. The collective market worth of all tokens rose from less than $800 billion at the end of 2020 to over $2 trillion by the end of quarter 1 of 2021. Indicating that Coinbase profited from a rise in cryptocurrency trading and prices. The minimum trading cost on Coinbase is 1.49% each transaction. While it earns money from both purchasing and selling assets, it makes more money when Bitcoin values are rising. increased asset under management, trading volumes, and maybe more users accessing its platform to attempt to grab a piece of the action mean higher values. Coinbase is profiting from growing institutional use of Bitcoin in addition to cryptocurrency pricing. Cathie Wood's Bitcoin optimism stems from the belief that the more normal businesses, rather than simply banks and fintech platforms, that keep Bitcoin on their balance sheets, the higher its value and reputation will rise. Coinbase's institutional trading volumes in Q1 were roughly 80% greater than retail trading volumes, which may surprise you. Bitcoin and Ethereum, which account for over 75% of the assets housed on the Coinbase platform, contributed a significant portion of that. To put it another way, the Bitcoin business has matured and is now controlled by major firms, a long cry from its seedy beginnings. To summarize, Coinbase is one of the few businesses that can boast both profitability and significant growth potential. While noting the cyclicality of the cryptocurrency industry and the good and negative implications this dynamic will have on Coinbase's performance, management is confident that the boom may continue into the second quarter. That brings us to Coinbase's flaws, the first of which is the volatility of Bitcoin. Cryptocurrency may be more widespread than it ever was, but it is still extremely volatile. Bitcoin and Ethereum fell more than 50% in only a few days, at the worst of the May cryptocurrency meltdown. Bitcoin has been useless as a currency due to its high volatility. In the short to medium term, prolonged declines in asset values and investor mood might result in challenging comparisons or even negative growth for Coinbase. If you don't believe in the future of cryptocurrencies, you should probably avoid Coinbase. Even when that baseline is reached, increasing competition remains a threat. Coinbase's rivals often provide greater interest rates and cheaper or no trade costs than Coinbase. Coinbase is expected to encounter increased competition as Bitcoin usage rises, which may put pressure on profit margins and cause the company's user base to stagnate or decline. Coinbase, on the other hand, has never been hacked and has made significant investments in security and a user-friendly design, as well as a reputation for providing high liquidity, which institutional investors love. Cathie Wood and her colleagues have been buying Coinbase stock because they believe in Bitcoin's future as an asset class and as a store of value. Given Coinbase's Q1 results and Q2 predictions, the company's 2021 statistics are expected to be fantastic, resulting in stellar valuation ratios. The main concern is whether it will be able to keep up its amazing pace. Before plunging fully into cryptocurrency-related ventures, investors new to the area should spend some time studying the various forms of cryptocurrencies. Coinbase, on the other hand, appears to be one of the finest cryptocurrency stocks out now for investors who already hold Bitcoin or Ethereum, or who are just wanting to establish a stake in shares rather than tokens. According to Wood, Bitcoin has shown to be a reliable store of value and a means of avoiding asset expropriation. Following the emergence of Layer 2 solutions like the Lightning Network, she claimed it had the potential to be a settlement network. ARK, on the other hand, is becoming more interested in Ethereum, having invested in Grayscale's Ethereum Trust and adding on Ethereum Miner to its fintech analysis team. Stablecoins, decentralized finance, and non-fungible tokens all pique our interest. We're also intrigued by the fact that developers are moving to Ethereum at a breakneck pace. Follow the developers, let's see what they're doing, I constantly tell our analysts. Wood informed Whittemore because that's a loud signal. Musk, on the other hand, stated that he would assist Bitcoin miners in greening their operations. This auditing of what miners are prepared to do in terms of how much of their power is generated by renewables, particularly in North America, will throw that subject into sharp focus. It will stimulate a greater acceleration in the deployment of renewables than would otherwise be the case. Mining and renewables can develop in tandem, according to a recent Square Arc white paper, with Bitcoin functioning as a battery to absorb surplus power produced by intermittent sources like solar and wind, Wood added. Mining, in effect, can help fund renewables and make solar more appealing to innovators like Arc. Previously, the business did not consider solar and wind as having a high profit potential, but that might change today. She expressed her excitement by saying, "I'm genuinely pretty enthusiastic about it." Let us know if you think Ethereum will surpass Bitcoin. How much Ethereum price will affect after comments made by Cathie Woods?